Hi, everyone. Welcome to the October 2025 edition of Student of the Market. At THG Retirement Solutions, we break down the noise. We provide a clear monthly snapshot of the market so that you can stay informed and focus on what matters most. This month, we'll be focusing on strong summer performance, Fed policy, and how politics and taxes interact with investing. As you will see here, we just had the second best summer since 1950, up 20%. You'll also see that in the top performing summers from May to September 30th, they've usually meant a strong fourth quarter as well. So hopefully we have that tailwind behind us and things will continue looking good throughout the end of this year. As we're recording this, there's a government shutdown going on. Historically, market reaction to government shutdowns has been limited. And as you'll see here as well, that following a government shutdown has actually been a positive return of an average of 12.4% over the following year. Key takeaway here is just don't let the political headlines get in the way of your long-term plan. The next slide is the current market backdrop. This is something we talked about in last month's version, and it was the cutting of interest rates along with no recession in the near future as far as our forecasts. So when you look here, you'll see that that is the best combination of recession versus no recession and cutting versus pause or rising rates. So you'll see again on that top left box that in a 12-month period, following no recession with rate cuts, the market has been up 17%. So again, another tailwind that we are looking forward to going forward. Politics is always a big topic, but what you'll see here is a mishmash of different sectors of what's done well and when. And what you'll see, I think the main takeaways here is if you look at Obama and Trump one, the top three sectors were identical. As far as what the top performing sectors were. And even if you look at Bush versus Biden, obviously pretty different political backgrounds, you'll see energy was the number one performer for both. So market momentum overrides political narratives typically. Capital gains distribution is a big thing that no one's talking about. If you have any mutual funds in a taxable account, be wary of the potential of having large capital gains payments coming out of those. How mutual funds work is that money flows into the mutual fund, and typically a mutual fund manager will be able to use that to offset any gains because they'll be buying their new stocks with them. But as you'll see here on this slide, there's been about a $5 billion exit over the last 12 months from the top 25 mutual funds. So what that does is that causes mutual fund managers to sell their top holdings. Could be ones that had huge capital gains already, and they pass those gains on to the holders of the mutual fund. So if you're in mutual funds, be careful and make sure to keep an eye out for this towards the end of the year, especially if you haven't held them very long. So you'll see here that interest rates from the time they hit just above 4% in October of 2022 to now are pretty similar. We're just under that 4.2% now. But it is something that as you look, you see things haven't changed that much over the last 3 years from an interest rates perspective. That said, flexible bond managers, more of the multi-sector or non-traditional, have done very well. You also want to make sure that you're investing in the right area. So fixed income management has been outperforming, and we believe that it will continue to outperform. As a final takeaway, markets continue to move fast and headlines can be noisy. Staying diversified, understanding the big picture, and keeping a long-term perspective is how you stay ahead. If you have any questions or want to talk through this presentation and what it means for you specifically, don't hesitate to reach out to our team at THG Retirement Solutions. We are here to help. Thank you, and we'll talk to you again next month.